Let's play a game. The game is Riley wearing a hat right now? What is going on with your hair? Like, my hair is crazy.
Dude, I told you.
It looks like you're wearing a hat.
I've been growing up my hair for the first time in a long time. If you actually go back and look at the videos of me, like the very beginning of SoFi Weekly, I had no hair whatsoever.
Is Justin Bieber on the panel?
I think Kelly said I look 12.
So let's do a little shuffle, little musical chairs. We're gonna put me here. I know me here is weird. I'll go back there. Steve will go on the bottom.
Oh my God.
Steve's definitely not a bottom. He's a top. Never mind. Riley's bottom. Okay.
Since SoFi hit $10, am I officially correct since I said it would hit $10 by the end of 2023? I never said it was going to stay at $10. So am I correct, or do I need to revise the statement?
No, you're right. You got it right.
Old prediction is closed out as a win. We're going to make a new prediction. SoFi 15 by end of the year.
Wow. Okay.
And I will put it in the next article I write it whenever I write it.
I don't even think that's that crazy.
So you want to talk about this shareholders meeting? Tannor, I think you covered this live. You want to discuss this?
It was 4 minutes long. They talked about a reverse stock split, and then there was one Q&A where they said, how are you going to retain shareholders' confidence that the stock price will stay up or something along these lines? And Noto said, you know, we're going to continue to make great products or something.
They voted against the stock split, though, didn't they? The board didn't give them approval?
I think so, yeah.
Which is wild, because the last two times we voted on that, it was 90% of people voted for stock reverse split powers, which is wild. That changed a lot since the last time we voted on it.
So is there any SoFi news this week, or?
A couple of downgrades, down 10% today.
We had 3 downgrades in a single day, something like that.
So dumb, so dumb.
Not only did we have 3 downgrades, but the interesting part was that they all raised, or most of them raised price targets too. Are they even really downgrades at that point? If an analyst says it's no longer a buy, it's a hold, but then goes from 6.5 to 8.
Can somebody explain what a price target is?
It's 12 months out.
12 months out. What is it, like 95% of them are always wrong?
The analysts are always going to follow the stock price.
We got good price targets like a couple days ago, like the $14 one, and I think
but this is why, right? Because
and then we got this is what I named the podcast. I said SoFi shoots up to 10 before greedy analysts downgrade to get more stonk at a cheaper price. I feel like that was
yeah, dude. Even that I wanted to talk about today. Like,
analysts are protecting their downside. They're coming in with different predictions that are going to be harder to.
They're trying to get the stock cheaper. That's the only thing that's happening.
Dude, but the thing is, like, these price targets that analysts had have been hit already in June. If you look at some of these analyst price targets, they're at 6, they're at 7, whatever. And SoFi blew through all of them. All of a sudden, they look like idiots if they don't raise their price target, and then they raise it to 12, and then SoFi goes back down to 9, and so then they lower it to 8 again, right? And shit. Oppenheimer was the one, and Oppenheimer, granted, has a pretty decent analyst. So last week they raised it to 10, and then this week again they made it 8 or I think 9. This is why I got on David Cavrini's ass too. You cannot change price targets weekly, man. Change price targets whenever you have new data coming out. Price targets are supposed to be some type of discounted cash flow or some type of valuation forecasting model that is based on actual company fundamentals, not short-term price movements.
Look, the real telltale will be when the new 13Fs are filed and we see who's buying and who's selling from the big institutions, and these really large volume days, we'll see if it was retail or if it was actually institutions adding to ETFs and mutual funds.
How far do we think this pullback is going to go? Where do we think it's going to settle? Personally, I think that I don't think we break below 8 unless we go into a macro downturn.
Can we open a yearly chart? Because every time this happens to SoFi, it goes straight down to 4 or 5, every time.
Some people just went up 100%. Some operate the methodology of when you're up 100%, you take your original investment out and play with the house's money. That could be what's happening too. And there's nothing wrong with that. It's a smart way of protecting your downside.
It does do a lot of these peaks and then pull back pretty quickly.
But
everywhere.
In all fairness, in the other times, something always happens. Student loans got pushed off. Something always happens.
Very true.
And I'm not saying that it's not going to fall this time, but this time, I do think it's falling for other reasons. I think it's profit taking, not a blow to student loans or something else getting pushed out.
Yeah, I think there's too many catalysts over the next couple of months with student loans,
I agree
gap
with that.
profitability. There's a lot of stuff coming. I also think the sentiment around the stock has changed, and maybe I'm naive for that, but I just think in general there are people that are much more excited about the company given the growth prospects that have come on. We haven't even seen the effect of them acquiring Wyndham. Like, there's so many things for them to show. Noto on these calls and these fireside chats, he's sounding more confident just in terms of deposit growth and where the business is going. So I think we got the price target increases for a reason. And I think if it falls back down below 8, it would be purely macro, but it could definitely get there.
If it goes down and the gains I've seen in the past 2 weeks, 3 weeks go away, so what? I'll buy more. Like, I am holding for the long term unless something changes my investment thesis. You're buying a piece of a company. You're not buying a stock. You're buying an equity position in a company. You don't sell. Nobody sells a private business because of headlines. Sometime in 2024, regardless of how Powell sounded this week, it is probably a likelihood that they're going to start cutting rates at some point next year. And once they start bringing rates down, you're going to see increased activity in the home market, which is good for SoFi and other companies.
I mean,
Didn't they say they're keeping the option open to even raise rates at the end of the year?
Powell was pretty adamant. Most of the Fed members feel that there is at least 2 hikes coming this year. They need to establish credibility. They have none.
that's what I'm saying. They're doing it for credibility.
They're not going to cut this year. Maybe they don't raise. Maybe they're just staying hawkish, but they're not cutting this year.
If they're done raising, there's going to be a Santa Claus rally. It's going to be nice.
Remember, they are looking at trailing data.
So they're definitely not hiking when inflation goes to 3.2%. Like, there's no.
But that exactly. There's a good chance when they go to Jackson Hole, inflation is in the low 3s or even high 2s, maybe.
They need to dig themselves out of Jackson's Hole or wherever the hell they are and look at the real data because they're not fucking hiking. Like, that's not happening. Tevis, why are you laughing so much at my jokes, bro? Like, I feel like I'm on a first date with you. I just make you laugh like crazy. Like, this is ridiculous. Good.
By the end of the month, we should know whether or not SoFi is in the top 100 U.S. banks in America. Every quarter, about 8 weeks after each quarter, the Federal Reserve Board updates their list of banks and how big they are. And in 22, like September of 22, SoFi was the 184th biggest bank in America. Then in December, it was the 150th or 49th. And then in March, at the end of March, it was 114th. So it's been getting very, very close. Somebody on Reddit that just posted his thoughts on it and basically saying by the end of this month, we should get the updated ranking, and SoFi should be in the top 100 U.S. banks in America, which is awesome. Like, that really gives us a lot of credibility. It's going to be really cool.
That's by deposits, right? What is that list by? It's definitely not by market cap.
It's probably deposits or total assets.
Don't they take like 6 weeks to actually put out that report, though? Like, it's not going to come out June 30th.
It's always at the end of the month.
That's not true. They just put out the March one like quite recently, right? It was like in May that it dropped.
Really?
Yeah, it's just the dates that you're looking at is the date that it reported to, not whenever it actually releases.
When we were talking about SoFi at $4, everybody was silent. There was nobody talking about SoFi. But like just recently, I've been seeing like so many Twitter accounts asking people to follow them about their charting. Like,
that's
like,
because we're at $8, dude.
Well, welcome to the stock market, though. That's just every stock. People buy when it's green and they sell when it's red, and it's the opposite of what they should do. But that's the retail market for you, and that's why the majority, the high majority of the average investors make, like on average, I think it's like 2.5% per year.
Look, most investors would be better just buying an S&P index fund.
When we were in the 5s and 4s, like there was more actually company-specific news that were coming out. In the last 3 weeks that we've just been rising, it doesn't seem that there's any bit of news. Like Noto's not really buying, or there's not really any specific new like product offerings. Like the SoFi at Work matching was the only piece of news we've had since the middle of May, really. That's company specific. But it's still been exciting because, like, don't forget, man, Monday was when we hit $10. Today we closed at 8.5. It's been so volatile. There's been so much volume, and the stock has been moving like $1 a day, basically, either up or down, which is crazy to see.
Do you think that's because of the actual share price, though, that Noto and team don't really have to push out or buy shares? Like, if he's buying shares for confidence and the stock price is already running up to 10, does he really need to buy more shares?
I think that Noto buying shares is a tool in his arsenal to stoke up enthusiasm and optimism hope around the stock. Realistically, I mean, when he doesn't need to do it, then I don't think he's incentivized to. If he buys shares at 8, 9, 10, whatever, it becomes such a normal thing, and he can't use it anymore for when the stock falls to like $5. Like he doesn't have that in his arsenal anymore.
So remember, he started buying shares on the open market around 1450.
Right, but what I'm saying, Stephen, is like if we zoom out directionally, he always buys when we're, down and to the right.
Yes.
That's perfectly fine too, though. I mean, that's practically how I've been doing my purchases. What are you guys doing with your shares?
I wanted to sell covered calls on my shares. I didn't. I'm probably going to sell some cash secured puts at a lower price.
No, isn't it good you didn't sell covered calls? Because it was
No,
running up. Like, what strike did you want to sell them at?
Like 11.
It ran up to 10. So if you had sold covered calls at 7 to 10, you would have lost the share.
Yeah, no, I wanted to sell covered calls the other day out a week or two to 11.
Okay.
Because I thought that they were really high premiums. I decided not to in case it kept running. And
So that's a good thing. I mean, it could have kept running. You never know.
Yeah,
It could have easily
look,
kept running.
You never know. But as far as buying more shares, I don't think I'm going to just buy shares. I think I'm going to get paid to buy shares. I think I'm just going to take the cash I would have put in, sell cash secured puts. That way, if it hits a certain price, I'm forced to buy shares and I get paid a premium to do it. Because you know what? If I say to myself, I'm going to buy X amount of shares if it hits 750, why not just sell cash secured puts for however many shares? That way, if it hits 750 in that time frame, I'm forced to buy the shares and I get paid for it. If it doesn't, expires worthless, I still got paid to lock up my money.
What are the rules for how you're actually placing them out of the money and just allowing yourself to make a slight dividend?
Yo, TJ, you want to join and explain this shit, bro? I'll send you a link right now. If only there was someone who did this for a living and made millions of dollars with this strategy. It's painful hearing you guys. Well, if you
By
want
the
to
way, he has made a lot of money in the last month, like a crazy amount of money.
Wait, so
TJ,
Tannor,
good for you.
Tannor, you know what cash secured puts are, right? A cash secured put to me is the first option strategy I learned, and it's the easiest thing when it comes to options. I think it's even easier than covered calls. Let's say SoFi's at $10. A cash secured put, you would be selling a put into the market at, let's say, an $8 strike price. Let's say the market's giving you $20 or something like that for that. I don't know what percentage that is as a premium, but let's say you're getting $20 to do that. You would put up 100 shares as collateral.
Yep.
So what's 100 times 8? $800. You would have to put up the cash, right? One contract, 100 shares, $800. And basically Robinhood or whatever brokerage you have, they would keep that as collateral. Now, let's say the option expires in a month or 3 months or 5 months, whatever it is. As long as the stock does not get to that strike price, you get to keep that $20 premium that you paid for. So 20 divided by 800, whatever that is. I think that's like a 4% premium. I might be getting that wrong, but that would be the premium you get. And then Robinhood or your brokerage would give you that $800 back. Now, let's say the stock goes to $8 or below. That means you will be forced to buy those shares. That means your collateral will be taken away. Now, let's say the stock goes to $7 and you have to buy it at $8. Theoretically, that's bad, right? Because the stock's at 7, you're being forced to buy it at 8. However, you got a premium and you're long the company. So this is one of those options that's, I think, one of the least riskiest options, because if you do end up getting the stock, this is what TJ does. He makes like a couple $1,000,000 just selling cash secured puts because he collects the premium. If the stock doesn't get to that strike price, you keep the premium. If it does get to that strike price, you have to buy the stock. But the premium you got plus the money you put in basically reduces your cost average.
Right. And if you're long on the company, it doesn't matter.
If you're long on SoFi and SoFi goes down, would you buy more shares? If that answer is yes, would you buy more shares at $7?
Yes.
So right now, July 14th, a cash secured put at $7 is at 14 cents. That means for every $700 that you put up, you would get paid $14, which is a 2% return. So you're making 2% on that 700 regardless. If it never hits, you keep the 2%. If it hits, you get shares assigned to you at $7. Your $700 becomes 100 shares of SoFi, but you really paid $686 because you collected the $14 of premium. That is exactly how a cash secured put works.
Yeah, see, the problem I have with that is in the States, everything is free. In Canada, for options, we have straight up commissions that are like $20. And so I would need like, exactly, right? It was like we're stuck in the 80s.
There's been no incentive for me to learn at all.
Yeah, that makes it no incentive whatsoever.
That's the thing, though. Like I need like 10 grand of SoFi to make like $100, and it doesn't like it's the juice is not worth the squeeze.
All right, we have an expert. He'll explain it.
TJ.
So let's keep it simple. For those of you all who know me, my name's TJ. I'm the WheelDeal. I sell puts, I sell calls for a living. So what you have to do before anything else is you have to pick a stock that you legit want to be long on in order for the strategy to materialize, because it takes sometimes 3 to 5 years to manufacture the win. I know all of you guys are on long SoFi. I've met Tevis personally. I've met Riley personally, super long on SoFi. There's no way Tanner's not fucking long on SoFi. He knows everything about it. So you take a stock that you want to own, but you need to be able to assess the risk reward, right? You know, you want to have more upside than less downside. So the way to generate things like that is to get paid up front just for agreeing to buy a stock that you want to own anyway. So with SoFi, we can agree that it has a lot of upside, but it's not a surefire thing right now. So in order to minimize your risk, but still potentially have real nice upside potential, you would write a cash secured put. So you're essentially saying, hey, I'm willing to buy 100 shares of this stock and I'm willing to collateralize my money to do so. How are you going to incentivize me to not be able to access that money for a certain amount of time? So I'd be like, okay, I think SoFi is a good deal at 860, but I think it's a hell of a deal. It's a steal of a deal at 750. So how much would you pay me just for agreeing to buy these shares at $7.50? And
that answer is 27 cents.
So you're going to pay me 27 cents for how long?
July 14th. So you would get paid $27 on every $750.
Exactly. So where can I put $750 for 1 month and get paid 27 bucks up front to do so? For just agreeing to buy shares in a company that I want to fucking own anyway.
Yeah, so you're paying me 3.6% right now to do that.
For 1 month. So we're talking about premium per month. That's what I do for a living. I take a company that I want to own shares in. I want to be long on this company, but I have to minimize my risk because it's not a dividend paying stock. I mean, fuck, SoFi isn't even profitable yet. And I'm long SoFi, guys, to the tune of 400,000 fucking shares. But I have to be responsible with my money. I can't be that frivolous. I want to partake in SoFi, but I have to get paid to do so. The juice has to be worth the squeeze.
Basically, you're saying buying and holding at your level is just not worth
It's irresponsible on a company like SoFi at my level when there's apples out there, when there's dividend paying stocks that aren't going anywhere. So cash secured put, take a company that you want to own and you put the money on the sidelines and you get paid up front a premium just for agreeing to buy those shares of stock. Now, if it dips to your strike price on that expiration date, one of two things is going to happen. You're either going to own the shares or you're not going to own the shares. If it's above your strike price, you won't own the shares. If it's below your strike price, you would own the share. The silver bullet to being the wheel deal and trading the wheel strategy successfully is before you do any of that, watch all of the videos on rolling in and out of a position. Everybody's like, oh my God, I would never sell covered calls against my shares. And I'm like, why the hell not? You can get paid to change your mind. It's called the roll out and up. It's not that big of a deal. People just like to over dramatize things on YouTube.
Now, TJ, would you say most people that barely understand options, we shouldn't engage in this as quickly, or is there a certain strategy you would say to start researching first?
First thing you want to do is research the living shit out of the company, because whenever you're buying shares of a company, you're buying into the company, right? We're all buying into Noto. The dude's legit. Everything that he touches turns to gold. I have reason to believe that SoFi won't be any different. But anyway, we take a company that we want to own. We're going to sell a cash secured put, and we're going to get paid some money to do that. And we're going to do that over and over and over again until we get the shares of the company that we want for the money that we're willing to pay for the shares. And then once that happens, now you're legit long the stock, but you've already made some money along the way. You've manufactured a dividend. That's essentially what you've done. And then whenever you own those shares, you're like, okay, I got little houses here. 100 shares represents one contract that you can sell covered calls against. So if you were in the real estate business and you were buying rental houses, would you buy rental houses and not put a fucking renter in there? Would you not put a tenant in there and collect rent? Because that would be stupid. If that was your business, if that was your line of work, and you're going to go buy rental houses and not actually put them up for rent.
Do you always stick with the same increment of time, or do you vary that up?
I have weeklies, monthlies, quarterlies, and I even sell lead puts. I call them backstop trades. I have SoFi puts for January of 2025 already, guys, because I'm legit long the stock.
TJ, can we go over running a wheel on a portion of your shares?
Cash secure put, you're going to get paid up front to buy shares. Essentially, you're getting paid to buy the dip in layman's terms. And then if that happens, you're going to own the shares. And then you're going to name your price at what would I be okay selling these shares if I didn't have the ability to roll? But you're essentially saying, hey, I bought these shares at 750. I know that they could potentially go to 10, but I don't think they're going to go there during this time frame. So how much money would you give me just for agreeing to do that? You're getting paid money for agreeing to buy, and you're getting paid money for agreeing to sell. And that's how you manufacture the win. All the while you're essentially, let's say 750 is the target price, your strike price. Your whole goal is to collect via cash secured put premium, cover call premium, at least $750. That way, if and when you choose to own these shares at $750 for 100 shares, you bought them with OPM, other people's money. And that's what wealthy people do to get ahead in life. It's other people's efforts, other people's monies, other people's ideas, and stay the fuck away from other people's opinions, because that shit will make you broke.
TJ, what's your average on those 400,000 shares now?
Of actual owning them outright, it's a little bit under 7, and my adjusted cost basis just hit the $3.50 mark.
What is adjusted cost basis mean?
You take what you paid for the shares, you subtract everything you collected via cash secured puts and cover calls, and that gives you an adjusted cost.
And that's like 2 years of all those premiums. So theoretically, 400,000 times 3, you paid 1.2 million, but 400,000 times 9, you're at 3.6 million in total.
And he's still making income every week, every 2 weeks, rolling them in the wheel.
Correct.
The wheel is such a good strategy. Like if you have 1,000 shares of something, run a wheel on 100, 200 shares.
So if you're kind of new to it and you're like, man, I absolutely want to be long on these shares and I don't want to touch them, just take a portion, 25, 30, 40% of those shares and get those collecting rent for you, fetching rent, and you'll get addicted to that premium and you'll never own a non-dividend paying stock. Free and clear again, you got to put that sucker to work for you.
Exactly. Understand that when you sell a covered call, you have to be okay with the stock running up to that price and you losing your shares.
If you don't know how to roll.
As SoFi was crashing and the price was coming down, and you're putting a ton of capital on a price that you're willing to buy SoFi at. Let's say it was at 11 and you go, okay, well, if it went down to 9 or something like this. But then by the time that actually happened, the stock might have been at 7. Quite a large risk there, because now you have to pick up those shares at $9 rather than 7.
But you have the ability to change your mind and roll out of the contract. You can get paid to roll out and up on a covered call or down and out on a cash secured put. If it goes against me, like, and all of a sudden something, whatever, another downgrade, the Wedbush guy is somehow able to move the market like you did, a month or 2 ago, whenever that happened. And that happens, I can go back, I can reassess the landscape, and I'd be like, hey, you know what? I thought 750 was a steal of a deal. It turns out that Mr. Market is saying $6 is a steal of a deal. So instead of July the 14th, I can essentially say, hey, I'm going to renege on this contract, Tannor and Tevis. And instead of 750 on July the 14th or whatever the expiration date was, we call them expiries. Let's see what it looks like in August or September. How much money would you pay me to roll out of this contract, buy to close this one, so to open the new options? And you might be able to pick up, if you got 27 cents on the front end, you might be able to pick up another 10 or 15 cents and lower your strike price from 750 to 7, and then you lower your risk profile that way, Tannor. I have literally rolled positions, guys, for over a year before I got out of the option entirely, because rolling is the silver bullet. I wouldn't be the WheelDeal without my ability to roll out and up or down and out if it's cash secured put, out and up if it's a covered call.
The problem, so here's the thing, PJ, like we're both in Canada, and in Canada they have commissions for options trading, and it's like $20 per trade. I realistically only do leaps. Wheeling, actually writing calls, cash secured puts, I never did any of these because you always need a large amount of underlying shares to actually make it worth it. Like if I have 400,000 shares, of course it's a no-brainer because I'm literally pulling out somebody's salary weekly. But if you only have, let's say, I don't know, 5,000 shares or 1,000 shares, even worse, I don't know what I could feasibly get out of that. And is it even worth the effort to get, I don't know, $50 a week or something like that,
Absolutely. Like, I don't know that I would enter into 2 cash secured put contracts unless they were annually, unless they were leaps. Because if I'm gonna have to relinquish 20 of these $27 to the brokerage just for allowing me to play ball, I'm not interested in playing ball.
In Canada, it's just never been a solution for me. No one talks about it. No one ever does it. So I've just been holding shares.
I think it would totally be worth it with 1,000 shares because that can make you some pretty decent money. If you were selling monthly puts, you're talking about $350 a month.
The real
350
example-
bucks a month on 1,000 shares?
On cash secured put on cover calls. Let me put it on cover calls. And I'd give you the price that I would be looking at. I would be very, very conservative, like say 1050. Yeah, that's going to bring you in about between 300 and 350 bucks a month with the ability to roll out and up, guys. Like, guys, here's the thing, man. I sell cash secured puts and I start off with the leap put. So I'm a real bullish on SoFi. And right now I just wrote a ton of cash secured puts for January of 2024 at 750. So what I do is I tied up a lot of money. I sold cash secured puts at 750 for January 2024. And then I take all of that capital and I sell short-term cash secured puts on SoFi as well. Like right now I have a ton of cash secured puts that just went in the money at $9 with SoFi. And I got all of the money to be able to do that from the premiums that I collected on the 750 put. So we're not even talking about the compounding effect of this whole thing, Tannor. Like all my covered calls, guys, the only thing that's in the money is about 100,000 of these shares at 750 for January of 2024. But here in about 60 or 90 days, I'm going to renege on that contract. I'm going to close all of those positions out for a loss, but then I'm immediately going to sell to open the $10 strikes for January of 2025. And I'm going to get even more premium than I had to pay back to get out of my 750 calls. So now for agreeing to sell that batch of shares at 750, I'm going to make a net credit to just change my mind and agree to sell them at $10. So now my upside just went up $250 a contract times 1,000 contracts or whatever it is. Now, granted, I have quite a bit of capital backing me now, but whenever I first started with the wheel strategy, I made it all play out with only 20,000 bucks. Because if I can't do it with 20,000, how are you going to do it with 2 million? I knew that eventually, if these companies just stayed in business, the premium that I was going to collect was going to far outweigh the money that I was going to tie up on the shares that I chose to own long term.
It sounds like you're making a really big beat on the markets whenever the stocks are staying stagnant.
Yeah, because you're making money on the puts and the calls simultaneously. The best situation for a wheeler is for the stocks to flatline.
There has to be some downside, and I can't go without believing that there's some downside.
There is definitely downside. If the stock were to go parabolic, let's say if SoFi went to $20 over the course of a week, I would be leaving a lot of meat on the bone. I would be leaving a lot of money on the table because mathematically it would be extremely hard to roll. So I could kick this damn can down the road is what we call it, right? I can kick the can down the road as far as I can, but in order for me to roll up to a strike price that makes sense because the market conditions have changed, I may have to relinquish a lot of that premium and then some that was paid to me on the front end. So there is absolutely potential downside. I have a little podcast that I just started called Wheelers, guys, and I'd love to have you guys on there and we talk all things wheel strategy. I'm doing it. The next one's this next Tuesday at 10 a.m. Central Time. I don't know what that is in Canada. So if you guys ever want to come on that, or I'd be happy to go on y'all's channel, and I would love to show you guys all things wheel strategy because I have said this over and over and over again ad nauseum. If smart people would start doing the wheel, look at what I'm doing with it. Imagine what you could do with it.
All right, let's get out of here. That's all my time. So let's continue this another time. Thank you so much, TJ.
TJ, thanks for your time. Appreciate it.
Guys.